Just take a look at this trade. It made a profit of $115. Now take a look at this trade, another $223. And if you ever wanted to make money through trading Forex, this is probably the trading strategy to do it with. Now, the trading strategy is based on the lower time frames. We will mainly use the 15-minute. However, it's always recommended to use multiple trading time frames for best results. And don't worry, I'll show you how to do that later. For now, let's discuss the indicators for the trading strategy. We will need 3 exponential moving averages. Simply type in EMA to find them. The trading period lengths will be 5, 10, and 50. For these trading indicators to work properly, make sure the source is selected as close. Okay, now let's take a look at our first trade utilizing the EMA trading strategy. It will be easier to analyze on the naked chart first before cluttering with trading indicators. So you want to find a pair that has been respecting the top and bottom price levels. Typically, these are called support and resistance, or supply and demand. When this type of price action occurs, this is called a consolidation. So what we want is the market to break one of the respective price levels, whether it's the top and bottom, so we can catch a trend early. In this example, we can see that the market candlestick has broken our respected level. This is now a confirmed breakout. We can now add our EMA lines back to our charts, and as we can see, the candlestick has broke 2 of them. However, the blue 50 EMA line has not yet been broken and is the strongest moving average out of the 3. We simply cannot enter the trade just yet. We want to wait for the candlesticks to pass through the 50 moving average and close so that we can get a favorable price level to enter the trade. So once the currency pair price moves to the desired level, we will have a push exhaustion push trade setup. So here's a quick example. We get an initial push towards the upside. That's the break of structure. We then have an exhaustion to the previous area of sensitivity. The resistance becomes support, and it also respects the EMA lines. And after push and exhaustion, we are expecting yet another push towards the upside to complete this trade setup. So in this case, the trade setup we want to see is the exhaustion back to the previous area of EMA lines. Once the price touches the yellow or red line, the 5 or 10 exponential moving average, we can enter the trade long. Now, for the proper Forex trade risk management, we never want to have a stop loss bigger than 10 pips. So something like this should do. And for your trade take profit level, you should ideally aim for twice the size of your stop loss level. Although this is situational because you might not be holding the trade for the full duration. Before you enter each trade, you need to understand where you're going to exit. Now, there are 2 situations. You can either measure the support and resistance just over here, the top and bottom, and add it where the breakout happened just over here. So that would be your target profit. 8.6 target profit, so your stop loss would be around maybe 5 to 4 pips to make it 2 to 1 risk to reward for proper risk management. However, of course, you can be a little greedier, which will make you more money, but it will involve a little bit more risk, is to actually adjust your stop loss where it was, close this off, and wait for the close below of the 5 and 10 exponential moving averages. So if the market continues moving up, you keep the trade running. You don't need to close off your trading position, and this way you can maximize your pip gains. Simply wait for the candlesticks to cross both the 5 and 10 exponential moving averages. If that close happens on the 15-minute chart, you close off the trade. So we had the strong push towards the upside. Once the 5 and 10 EMA lines have been broken with a red candlestick, in this case, you close off the trade early, and there we go. This would be your profit gain, around 12 pips profit. Remember that in Forex, you can trade and make money both ways. It doesn't matter whether you're buying or selling, meaning you can place a trade predicting the price will drop. It will reward you the same way as if the price would go up. Here's an example for this strategy as a sell trade with a little twist. Again, we can see a similar situation for the trade. We have our areas of support and resistance and a red candlestick that broke previous support. We are now on a push exhaustion push cycle. So now we are predicting that the currency pair will likely continue dropping down because it's bouncing off the 5 and 10 exponential moving averages. And although this seems to be the case with the red candlesticks following the exponential moving averages, as we can see, suddenly we have a directional change. What happened? This is due to the dreaded Forex news. Essentially, that's the only thing that drives price. Pure price action and indicators won't save you if you're on the wrong end of the stick. So the best thing you can do is take a look at the news events during the day and simply don't have a trade open during these hours, especially on the 15-minute time frames with this strategy. Since your target profit levels and stop loss levels are minimal, they are likely not going to be able to withstand market volatility. Of course, if the price action is really good, sometimes it might be worth the risk. As long as you have a minimal stop loss and a higher target profit, you could do fine. Imagine this candlestick did drop towards the downside. That would be a very profitable trade. All I'm saying, don't get disappointed if your trade does get wrecked through the news. It's just hard to predict. Now let's take a look at the final trade example utilizing multiple time frames that makes this trading strategy super powerful. So by finding a trade on the 15-minute time frame first that has all three exponential moving averages at the bottom and two of them touching the candlesticks, this overall move itself clearly shows bullish momentum. Furthermore, we want to look at the higher time frames to confirm this trade. What do we do? So I like to use the 4 times rule. 15 minutes times 4 is 1 hour. So I'm looking at the hourly time frame. And as we can see, the hourly candlestick has crossed the 50 exponential moving average. This is a bullish signal to buy. However, the overall market direction has been bearish. You can actually mark a squeeze pattern just over here. Market has been squeezing up and down every single time. However, I do believe that the bearish trend has ended simply because look at this. Just over here, the market has been dropping down steadily and had a huge push towards the downside, right? What's interesting is that push back up and a continuation back down. It did not break into a new lower low. If the candlesticks continue dropping down past the previous area of low, which is now a support, then you could consider that the trend has not finished. It will continue going up. However, this is not the case. It actually found a new trend going towards the upside every single time, which leads me to believe that the 50 exponential blue line is not likely gonna hold much longer since the price is showing me what's happening earlier. So knowing that this climb is happening, we can just double check, the hourly and the 15-minute time frame. We had the break of the 50 moving average. The last candlestick wick is rejecting off it. Likely it's gonna continue moving up. So coming back to the 15-minute time frame, we can instantly execute the trade because we know that we have a lot of buying pressure. Stop loss 10 pips. Nothing more, nothing less. As we can see, we want to ideally cover all 3 moving averages. We nearly covered the 50, but that's okay because if the price continues moving, the moving average will move inside the stop loss. So you have a little bit of leeway. Target profit ideally is double of your stop loss level. So let's just see what happens. And as we can see, it continued moving up until it actually broke past the 10 exponential moving average. This is where you would want to close off your trading position. So potentially with a very small risk of 10 pips, you can, maximize your pip gain up to 70 pips, even further to be fair, if you have the balls to hold on to the trade. Now, you may be interested in learning Forex from myself. I have a Telegram group for that. I provide trading signals with full reason behind the trade, so you can learn from me while also earning some money on the side, whatever you're doing. I have a ton of reviews and results are posted monthly, link in the description. Also, I believe you will find a lot of value in this video. Click to watch more.